and we're going to finish off this section with probably one of the most difficult patterns there is, which is the shark pattern. There are more complex patterns out there, but in relation to what we've done already, where you get M and W formations, which are quite easy to identify, the shark pattern in itself is very, very volatile. Hence why I've left it till last, because you really need to get to grips with fib extensions and using the fib retracements. So that's why I've made this part of the last series, because it just sort of runs on from the others, from what we've already gone through and already learnt. So, risk disclaimer then, I don't need to say this at this point, guys. If you've already watched the rest of the harmonic section, I think you know what I need to say. So please, please, please take your time and make sure you've taken that on board. So the shark pattern then, right. Patterns normally work through X to D leg completion. If you've already done the rest of this pattern series or the harmonic section, you'll know that we start from X to A to B, B to C, C to D, pattern completion. The shark is completely different. And the reason it's different, hence why it's named the shark, is sometimes it can just keep swimming. So therefore we need to set these extensions as areas. So we're always trying to jump in front of our next zone. So unlike some of the patterns where you can set take profit levels and stop loss levels before you get to that leg with limit orders, this is a little bit different. You really have to monitor this and trade this live whilst it's happening. The structure alone is very advanced, hence why, like I've previously said, it's one of the latter patterns we're going to look at this section. And you definitely need to get to grip with fibs. If you're still not sure of fibs, please go back, look at the other vids, look at the other fibs. I will be redoing the fibs on basic training, and I will be redoing the A, B, C, D pattern on the basic training. And I'm going to use that to link in with this as well, because obviously the way we do in our advanced training now and our VIP training is, well, it's a lot more advanced. And we're throwing stuff in there now that has excelled even what I thought it would be originally. So we're going to have to, you know, jump back there, alter the stuff at the beginning to link it in with stuff that we're doing now. So you're going to have to bear with us. It's a work in progress, guys. I'm not going to apologise for that, because ultimately I want this to be as up to date and as good as it can be. Hence why I've sort of took control of the training. So I'm not going to apologise for that. But this pattern does break down different, and ultimately, other than the fact that we've moved letters around a little bit, I'll break it through when we draw in the pattern. But rather than let's start afresh, let's forget everything that you know, let's forget the X to A, the A to B, B to C, and let's start again with this pattern completely. Even though you've got an idea, this is a little bit different. So scrub from your minds what you already know, practice, you know, revise over the weekends when the markets are closed. Go back, look at all the harmonic vids, look at the sections, go through it, revise, print off, make notes, take it on board, and then the following week you can be looking for these patterns on whether it be MT4 or TradingView. But let's look at what we got. Okay, so O is the start of the trend, and forgive my accent, the letter O, not an number O or 0. Okay, so it's O is the start of the trend, X is the end of the trend, A is the first pullback, B is a pullback of the pullback, and C would be our normal D, where we're looking at a target for B, which would be our pattern completion. The shark doesn't work like that. The shark's pattern completion is your TP level. Okay, so you could say, well, Brandon, to be fair then, you could have just left it as X to A, A to B, B to C. And yes, you're right, I could. However, that's not the shark pattern. So I've done it like this, and even though it's really confusing, trust me, you'll still get it. There's still an impulse leg, but instead of it being X to A, that's now O to X. Okay, there's nothing changed. It's other than the fact that D is now your pattern completion, which is your TP level. Because they are so volatile, very, very fast moving patterns, you need to be on this live on your charts trading it, okay? Hence why that leg is the completion. So let's try and break it down. Right, sharp pattern is a very new pattern. It was developed in 2011 by Scott Carney. He's the guy that is has developed the Harmonic Trader, and he's done loads of books, and ultimately the stuff he's got out there is phenomenal in relation to patterns. I know we've only got a few patterns in our harmonic section, but there are hundreds. I just wanted to cover these patterns because they are common. They're there. Loads of scanners use these patterns, but even though the scanners give you the pattern, sometimes they don't give you the exact ratios that you need. So by knowing this, you will be able to enter at the correct time rather than enter too early, and it continues to push up to what would be your stop because you've gone in too early. So the thing is with this pattern is it's similar to a crab pattern. It has an overextended swing point, C, which is the same as D on mouse patterns. It's different as it relies on the 886 or the 86% and the 113% ratios. So you need to make sure that you add these to your fibs before attempting to draw the pattern, okay? You need an 886 or an 86%, which you should have from previous patterns, but I don't know whether you'll have the 1.13 extension. Make sure you've added the 1.13 extension because you're definitely going to need that. It's not your normal M or W pattern due to its volatile nature, but price can move quickly around the pattern, so it's not a set and forget type like we've previously looked at. We can't set pending orders on it. We need to be on this as it's happening, okay? We need to be following this. Before we break this down, I need to say that this pattern completely mullered my head. So I'm not sitting here, and I never do with any of my training, and pretend I am the vat of all knowledge and I know everything that's going on, because I simply don't. All I do is I come up with things that I think will be good. I know a little bit about it. I delve into it. I do as much studying as I can so that when I deliver the training, it's as up to date as it can be, and I need to break it down in a way. I read 5 or 6 different versions of this pattern, all of which are different. Some of them were really confusing, of which it just got to the point where I was like, well, this is really blowing my mind. I spoke with VJ. I don't know whether you guys know VJ. He's definitely in the crypto group. He's definitely on the VIP group, and he's a bit of a pattern guru. So I'd like to take this time to say thanks to VJ for clarifying this for me, because at one point I think I had about 14 fibs all overlaying each other, and I literally put my hands up and I went, right, I'm mullered. I physically can't get this right in my head. So thanks to VJ. I said I'd give him a big thank you. It's very, very rare that I do give people thanks for giving me a chuck on certain things, but I know there's guys out there now in the VIP that are starting to smash this, and I want to take that opportunity as well to say keep doing what you're doing. Neil, Mitch, VJ, Trev, finally he's starting to talk some sense, laugh as you may. Adrian, you know, he's getting some good magic pips there, and everybody's flying now. So and the one thing I want to stress is that, and I think Jamie as well, Jamie's new to VIP, done some really good analysis, long-term analysis, some of the stuff he talks about and the way he talks about and the way we enter conversations. This is awesome, guys. This is what VIP was set up to do. It was what we were all here for. You know, Steve gave me a little bit of a lead with, you know, I want you to look at the training. But ultimately, we all look at the charts from different angles. And we've all got our own thing. Mitch, awesome long-term trader. Neil has started delving in short-term stuff, having done long-term. VJ is an awesome pattern trader. You know, Trev is just starting to set in the thing with structure, and he's starting to get to grips with everything. You know, we're talking about different patterns, different formations in the groups. And ultimately, you know, the one good thing about the VIP at the moment is if we all come at things from different angles, whether that be patterns, structure, support and resistance, from whether it be daily, intraday, weekly, swing trades, reversal, patterns, whatever, but we're all saying, I'm going to short this, I'm definitely going to long this. All of a sudden that confidence of you taking that trade and clicking that buy or sell is immensely higher than what it was previously. So before we move on and try and break this down, I just want to say thanks to everybody and thanks for doing what you're doing. You know, VIP wouldn't be the same without you guys, and without VJ I definitely wouldn't have been able to complete this show, so thanks for that. However, as with everything, training is all about what we take on board. For me, it's talking, discussing, visually making notes, writing things down, looking at stuff, writing things down, and that's the way I learn. We've all got different learning styles depending on what sort of education we've had. how we work best. Ultimately, you, at this point, once you've got this far, you should not only know your learning style, you should also know what type of trader you are and whether this would suit you. Bear in mind, we've talked about patterns being in that consolidation area. If there's big swing traders out there, patterns may not be the be all and end all unless there's a pattern on a very large swing. But if we're all in a group and you've got the likes of VJ, who's a good pattern trader, Mitch, Jamie, good swing traders, structure traders, Adrian, Neil, you know, and we're all coming in with the same sort of thing, then that is where the group will develop. And ultimately, we're all here for one reason, and that's to make a few bob. And if we can do that from a group analysis, then that's even better. So, moving on then, let's try and break this pattern down. Right. So, a little bit different then. We've still got 5 legs. Well, technically we've got 6 because that's the completion leg, but let's look at it normally. Right, out to X is our impulse leg, okay, or our structure. Now, the good thing with this pattern is the X to A isn't marked. So, usually when we talk of a pullback, it's to a, let's say, a 52, 61.8 or a 61 to a 786. Good thing with the bullish shark is there isn't one. So, out to X, we then get a pullback. Okay, we're looking at a strong trend. We're looking at a trend in an upward direction, but we're looking at a trend that's losing momentum. Okay, or even slowing down, because we still want it to break in our direction. We just want it to be slowing down. So the most important thing, the first important thing that we need to look at a bullish shark is the extension. Okay, and that extension is from O to X. So it's not a pullback from X to A and then another one. We get O to X. We have a pullback of whatever distance that is, but we need to get in at that point and we need to draw a fib extension from O to X, because the A to B move will be in that extension between a 1.13 and a 1.618 of O and X. Okay? The B to C move will then drop right into the zone, okay, and I'll refer to this, you'll see it more shortly, into the zone of a 1.618 to a 2.24 extension of X to A. Okay? Now that's the zone. But it must touch the 886 from O to B. Now usually we look at 886s and that level between the X and A. Okay? So this is O to B. Alright, so we need to be drawing these. And then you move to D, which is obviously the trade direction. So ultimately now you're thinking, right, okay, this is all different, Brandon. I see what you mean. It's a completely different pattern because it's a volatile pattern. We're looking at extensions rather than retracements. So we're looking at it pushing up to newer highs, then breaking past previous structures to newer lows. For example, X to A to B. That's a normal sort of pattern, Brandon. It's very similar. And then we're breaking past that structure, okay, into this extension zone, but must touch the 886. Okay, so let's look at a bullish shark and let's talk through the video. So here we have our O to X leg, similar to the X to A, but for this pattern, O to X, we have a retracement from X to A, right? We then need to look at the extension, right, which is swing low to high, straight back in again. Now we're looking for this extension to move into the 113 to the 1618. So that's the A to B move. Okay, the A to B move anywhere in that zone. There you go. Let's bin that off. Okay, that's gone. Let's get rid of that. Now, we need to then look at an extension from X to A, which I've drawn the wrong way around, so I'll sweep it back the other way. There you go. High to low, get the direction. Okay, so now we can see that zone clearly on that fib extension there. From the X to A extension, we've got the 1618 and the 2.24. So that's the zone we're looking at. Alright. But we now draw a fib from the O to the B to give us our 886, which you can see is in that zone. Okay, it is in that zone. So we need it to be in a 1618 and we need it to be 224 max, 1618 minimum, and it needs to touch the 886, right? Your stop loss will always be the 113 extension from the O to B. So when you draw your O to B fib and you're looking for that 886 for price to hit, okay? When you're looking at this for the price to hit that area, I do apologise for this, but I've got to show you. The price needs to hit the 886 for it to be a valid shark pattern. Now, the price could break the 618, so you're thinking, great, I'm in the zone. And you want to be seeing a reversal around inside this zone. Now, the price could start to reverse just inside the 1618, but the wick could touch that 886. It's still a valid pattern. The price could come all the way down, hit the 886, and wicks could come down as low as and touch the 224, and it'd still be a valid pattern. Okay, so when you're in this zone, you're looking at that now. The wick may come and strike it within that zone, all right, and then price rallies out, valid pattern. It may come down to here with the bottom of the candles. Wicks may even come lower, okay, still a valid pattern. And that's what it means about the sharks. You saw this move, how much area you had, okay, because sharks can keep on swimming. And then when it pulled back, you can see the type of area it's got, quite a big hit there. And then obviously this stop is quite low from where you will be entering compared to any normal pattern, but you need to give it room to breathe. It may indeed break that 224 and it could start rolling. It doesn't make it an invalid pattern, hence why they give you such big swing room. And what I'll say with the shark is you need that swing room. Unlike any other ones where we set it 10 pips and we do, you know, just inside, or we wait for our triggers and everything else, it's a volatile pattern, guys. These fib extensions, right, are big areas and you need to give this time to breathe, hence why you put your stop here. The price could indeed come all the way around, touch that 886, hit the 224. You're not going to get out the trade because it's broken that, because it could indeed push all the way down. You wouldn't be happy, granted, but the price could still reverse and go up to your minimum of a D completion, okay? But let's talk about that. So that's the bullish shark. Let's look at bearish shark. Same rules apply, okay? We move from O to X. X retraces to A. We have now set distance. A moves to B, and it needs to be a minimum extension of a 113 or a 1618 from the O to X. Okay, we then look at a X to A extension of a 1618 to a 224, giving us our zone, our area of entry. Okay, but then we have a fib from O to B, which shows us the 886, and that is our perfect pattern entry. Could push lower, okay? You back testing it, you trading it live, you may think, well, Brandon, you know what? If I see price reversing on the 886, I'll enter, and then I'll obviously take it up. If it's carrying on pushing past, I'll wait for a good candle entry. Even if it pushes lower, that's fine. You need to tweak this. It's a volatile pattern. You need to trade what suits you as a trader. All right. Let's look at the video for a bearish shark. And let's break it down. So O to X. That's the easy bit. Impulse leg. X to A. Now measured distance. But we want to draw a retracement or an extension. So we do it in the direction. I'm going to do it properly this time. There you go. Swing high to low. So you start off drawing it in the direction of your trend for the extension, guys, is an easy way to remember it. 113, 1618, look at that, it's a big zone. That's a very, very big zone. Okay. But we'll drop it a little bit further than we did on the last one, just to show you. Okay. We'll bin that extension off. We're then going to look at an extension of X to A. So low to high, back down in again. Okay, we've got our zone, 1618, 224. That's where we're looking for the zone to be. Okay, we're then going to draw a normal retracement from O to B. And that's going to give us our 886. We can see how that has moved now because the pattern pushed a little bit lower than what we expected it to. Okay, and this happens in real life trading, guys. But we're still looking at that zone of a 618 to touch the 886 to the 224. But now you can see, because I've drawn that other impulse leg, so I've gone the O to X, X to A to B leg, I drew that deeper. And now all of a sudden, right, it's a different pattern. Okay, it's a completely different pattern. But the same rules apply. We've still breached the 886. We're in that zone. We've drawn our stop, which is on the 113 extension. We know that. We're in that zone at this point. And obviously we're going to look for it to come down to the D. Okay, and that is basically how we do the pattern. A lot easier to draw. It's a lot easier to follow, but the main thing with this pattern is you need to look for that trigger of getting in the trade. Okay, you need to look for that trigger. So let's talk about trading the sharp pattern then. So the last one we looked at was a bearish shark. So we'll look at the bearish shark again. So we have our normal moves that we've gone through. Okay, and then C comes in. Okay, it's touched the 886. It's gone within our zone of a 1618 to a 224. And the price, has come in. It could have curved there, it could have curved there, it could have curved there. It still would have been a valid pattern. The price could have come in here at 618, just touched that 886 and then rolled. Either way, we know when to enter. For me, it would be candle formation. For me, it would be an MA cross. For me, it would be lower time frame structure. This pattern may have come up on a 1 hour chart. So I'd be looking at a 15-minute entry. Same as if it was on a 4 hour, you'd be probably looking at a 1 hour to 30-minute entry. Again, guys, back test it. Back test it, back test it, back test it, and get your confidence in the pattern and look at how it suits you. I prefer the 1 hour patterns. On our VJ has started using smaller time frame patterns, like 15-minute patterns, and he's literally in, out, done. Move on to the next one. That's down to him. I prefer the 1 hour patterns because I like the highest time frame structure. I feel that sometimes the higher time frame are more solid. They don't happen as frequent, granted, but that's just me. But ultimately, when we do roll out of that PRZ, our stops are going to be at the 113 extension, not 3 pips above, not 3 pips below, not 10 pips past X or 10 pips past O. The stop is a 113 extension. And that is what I do like about the pattern is the fibs tell you where to put your stop. You see the zone, you see it at the 886, the price then rolls. Your target, take profit level, is a D, pattern completion, which, as you can see, the fib is the B to C leg, and you're looking at a 50. Now, most of the patterns we've done is a 382 and a 618. Take profit 1, take profit 2. All right. What you'll usually find with this pattern, looking at the analysis, is that once it meets the C to D, you can get consolidation at this point around the 5 on a fib. It can break straight through. It can go as far as the 618. It can indeed move back down as far as 100% or back down to B. All right. But ultimately, the reason, because it's such a volatile pattern, and that's what you need to remember, because it's so volatile, you need to trade this textbook. So there's your stop, there's your zone, there's your entrance, there's your take profit. Let it go. Because it is so volatile, it is bouncing within itself. There's not, it's an extension rather than a retracement ratio, so therefore it wants to push on. By a mere by a mere extension, it always wants to push on. So it is a volatile pattern, guys. It's not a set and forget. You need to watch this. Yes, granted, once you enter in the PRZ, you could set your take profit levels at 0.5. If it gets to there or hits that, you could think of scaling out, and running a trailing stop maybe. But for me, I would trade this pattern due to its volatility, as it says on the tin. I would literally get in, hit point D, and I'd be done. all right? However, you may find me back testing, yeah, you do get a bit of consolidation, but then it pushes further. Great. You trade it however you want to trade it. All I'm doing is giving you the basics in the toolbox. You can sharpen them however you want. Again, thanks for your time. Thanks for VJ. Thanks for everyone. But just remember, this needs to be part of your plan. And if it is part of your plan your trade, trade your plan. Simple. Thanks for your time. Speak to you soon.